In June 2026, SpaceX is targeting the public markets under the ticker SPCX. They're looking to raise $75 billion. This chart compares SpaceX's targeted valuation against the total economic output of major nations. At $1.75 trillion, this single company is asking the market to value it at nearly half the entire GDP of India. To understand that number, you have to look at the math behind their 24-year run. Since 2002, they have evolved from a startup testing experimental rockets into a vertically integrated empire that builds its own spacecraft, launches them, and operates the orbital networks they carry. For retail investors, that $1.75 trillion price tag presents a serious dilemma. The decision is whether buying shares today is a rare chance to own the infrastructure of the future, or if it is an overpriced trap designed to let private insiders cash out. To answer that, we have to look at the three distinct businesses outlined in their S1 filing. The first is their space segment. This is built on their legacy rockets, like the Falcon 9, which currently launch more than 80% of the world's mass to orbit. In 2025, SpaceX pulled in $18.67 billion in total revenue. However, that revenue doesn't reach the bottom line. For that same year, the company reported a net loss of $4.9 billion. That reliable cash flow is being poured directly into Starship. This is their next generation heavy lift vehicle. It is necessary for Mars exploration, but right now, the research and development required to build it is consuming billions in capital. Then there is the connectivity segment. This is the actual growth engine of the company. Using a constellation of roughly 9,600 low Earth orbit satellites, Starlink is actively delivering internet service to more than 10 million paying subscribers globally through its network of nearly 10,000 satellites provided across 164 countries. The connectivity segment generated $1.19 billion in operating profit in early 2026. But that profit is immediately recycled. In 2025, SpaceX spent $3 billion on Starship development. Finally, there is a newly added AI segment. Following the 2026 acquisition of xAI, the company is integrating the Grok language model and massive terrestrial Colossus data centers into their existing orbital network. These aren't independent divisions. The rockets launch the satellites transmit the data, and the data feeds the AI. Are you funding an interconnected corporate empire where one man's attention is split across half a dozen different frontiers, and where the profits of one division heavily subsidize the ambitions of the others? The answer to that is probably yes. SpaceX's financial dream stems from capital expenditures. Over $7.7 billion,
the cost of this pivot is staggering.
Of their first
Over
quarter capital
$7.7 billion,
went toward
or
building terrestrial
76%
AI
of their
data
first
centers.
quarter capital
They
expenditure
are now betting
went
on
toward building
orbital
terrestrial
AI. With
AI
Earth's
data.
power grid struggling against AI demand, SpaceX plans to launch data center satellites that use constant solar energy in space to process workloads. Building AI infrastructure costs $12.7 billion. Essentially, SpaceX is a profitable global telecom provider that is using its earnings to act as a venture fund for a high-burn AI laboratory and a Mars exploration program. Wall Street uses a metric called a forward revenue multiple, which compares a stock's price tag against the money it is projected to make in the future. At $1.75 trillion, SpaceX is trading at roughly 60 times its projected 2026 revenue. To maintain that premium, the market is assuming absolutely flawless execution. With $18.67 billion in 2025 revenue, the market prices the company at 116 times trailing sales. Starlink must perfectly monetize its user base, and Starship must hit its development targets without costly delays. If you buy shares at this level, you're not paying for current profits. You're paying a steep premium to fund the construction of unproven interplanetary and AI infrastructure. Passive bystanders are now involuntary players in Elon Musk's long-term plan for the stars. There is a structural reality to this forced participation. While the public provides the capital, the structure of the deal ensures they have no say in how the company is actually run. According to the S1 filing, Elon Musk retains 85.1% voting power through Class B shares, easily outweighing the public's Class A shares. Class A shares will carry 1 vote each. Meanwhile, insiders hold Class B shares, which carry 10 votes each. By holding a vast majority of those Class B shares, Elon Musk retains absolute operational and corporate control over the public capital raised, with the power to single-handedly direct the board. This allows SpaceX to bypass standard protections like an independent board or shareholder votes. Some market analysts have labeled this the initial peasant offering. It describes a scenario where retail investors are invited to buy in at a peak valuation, while the founder consolidates absolute legal control. The result is a system where the public's money is tied to the stock's full index weight, where their legal rights as owners are almost entirely removed. The success of this massive forced bet rests on the shoulders of one man. But he isn't just focused on rockets. This also creates a unique market dynamic because of index inclusion. If a company of this size is added to the S&P 500, passive retail index funds and retirement accounts will be structurally forced to buy the stock automatically, regardless of the price or the risk. Millions of everyday investors will end up holding the financial risk of these massive space and AI bets, and they will do so without holding any actual voting power to keep management in check. The outcome of this IPO creates two potential realities for the market. In the catalyst scenario, a successful public debut triggers a massive influx of capital into the broader space sector, potentially unlocking a tech IPO boom throughout 2026. But there is a contagion scenario. If the company fails to justify its immense valuation multiple and the stock collapses, it could severely damage retail trust and drag down tech valuations across the entire board. This is why some market observers refer to highly anticipated debuts like this as an initial peasant offering, a scenario where early insiders leverage intense public hype to cash out at the absolute peak of the market. The success of SpaceX IPO would likely pull up space-adjacent stocks and private tech funds, opening the door for a new wave of industrial IPOs. However, if the valuation is rejected, the fallout could be significant. If the price drops when the post-IPO lockup ends, the moment insiders start selling their shares, the downward pressure hits the entire index. Because of its massive footprint, the volatility of this single stock will ripple through the retirement accounts of millions who have no choice but to hold it. So, for the individual investor looking at the June 12th ticker, what is the safest path? History shows that treating a high-growth story stock as a core foundation for a retirement plan is a high-risk move. The initial volatility can often lead to major losses for those who buy at the peak. The conservative playbook is to wait. Many analysts suggest holding off until at least the first earnings report in late 2026, allowing the market to see the actual audited financials before committing capital. If you feel you must own it on day one, the only sound approach is to keep it as a satellite holding, a small, speculative position that doesn't threaten your core financial stability. So, what are you planning to do when the SpaceX IPO lands? Let us know in the comments, and also drop what other topics you want us to cover next. Do like, share and subscribe. It lets us know how informative these videos are for you. Till next time, happy investing. Earnings report in late 2026, allowing the market to see the actual audited financials before committing capital. If you feel you must own it on day one, the only sound approach is to keep it as a satellite holding,
Funding a
a
launch
small,
provider.
speculative
You are
position
funding an
that doesn't
interconnected
threaten your
corporate
core
empire,
financial stability.
where one man's attention is
what are
split
you planning
across
to
half
do
a
when the
dozen different
SpaceX
frontiers.
IPO lands?
The
Let
June
us know in the
2026
comments, and
roadshow
also
will be the
drop what
moment
other
the market
topics you want
decides
us to cover
if a
next.
$1.75
Do
trillion
like, share and
valuation is
subscribe.
sustainable,
It lets us
or
know
if
how
hype has
informative
outpaced
these
the math.
videos are for you.
If the price
Till
holds,
next time,
it becomes a
happy
benchmark for the
investing.
entire